Welcome to the weekly technical analysis for October 7th to 11th. My name is Joel Chandran, lecturer here at Training to Invest. Today we'll cover the TSX, the Focus 5 stocks, gold, silver, oil, and several commodity-related ETFs. For the week, as you can see, the TSX ended higher than it opened, which is a good sign, showing that there is some strength for the index, mainly due to the Thursday's starting of the negotiations between the Democrats and Republicans about raising the debt ceiling. As you can see, MACD and the MACD histogram are both positive, and while it's positive, it isn't really trending higher. It's more flat than anything else, and that's due to because of kind of the peak levels reached here. We haven't been able to break through 13,000. We've come close a couple of times, but overall, that still remains a very, very strong level of resistance. Looking at the RSI and Stochastic, we do see positive increases because compared to last week, the closes are much different. So on the 3-year weekly chart, we do take notice of the positive gain, especially on the MACD and the MACD histogram. Looking at the 6-month daily chart, as you can see, Monday, Tuesday, Wednesday, kind of all down as we waited for the decision about the debt ceiling. Thursday, they started negotiating, and that really caused the markets a huge sigh of relief, and we saw everything skyrocket. Friday, due to Thanksgiving weekend here in Canada, we saw very little volume altogether. What's interesting to note here, MACD, the MACD histogram, we do have this beginning of a crossover. We're kind of at an inflection point right now, but there is some momentum turning around. On the Stochastic, very, very sharp increase, and that's definitely due to Thursday's rise. And Friday was flat because of the low volume. RSI, again, flat due to the low volume. I would expect Monday the market is closed. Tuesday would be a little bit of a volatile day. Wednesday, Thursday should see the market flatten out somewhat. So for the day, the TSX closed down 2.36 points to 12,892.11 points altogether. A bit lower than Thursday, but that's okay. We did see the run-up back through 12.8. This is the TSX versus its indices. Consumer discretionary, again, higher. Consumer staples, higher. Financials and energy, all the same 4 sectors continuing their growth, outpacing the TSX. And then gold, mining, and materials continue their free fall. Again, if you're looking to find where the winners are, it's consumer discretionary and consumer staples. Financials have definitely received a boost, and you'll see why when we look at the Focus 5. Energy has been a bit more moderate due to the oil prices altogether. But consumer discretionary and consumer staples are definitely where the capital is flowing. Looking at the price of oil over the last 6 months, you can see it's up $11 or 12.14% compared to 6 months ago. But it's definitely come down from its 110 due to the situation in Syria calming down and all the U.S. geopolitical issues, which have now filled the news. So from 110, we've fallen down past 105 and ended up close to about 103. We should see prices stabilize around the 103 point, but again, we do need to see what's going to happen in Syria. If anything else occurs in the Middle East, that'll push oil prices higher, or if we just see a pullback towards $100. This is a 3-year weekly chart for Enbridge. For the week, we closed higher than we opened, which is significant. A great sign, especially when we pushed through the 42.50 mark, as last week we closed below 42.50. This week we do see that turnaround. On the MACD and the MACD histogram, while it is still negative, we do see 1, 2, 3, 4, 5 weeks of shortening histogram bars. And on the negative side, we want the bars to shorten. So the trend is slowly turning. Maybe in this period of basing here around between 42.50, 43, and 44, but we're making our way through. momentum is definitely with the index. You can see we have the RSI turning higher for the stock, and we do have a crossover on the stochastic. Again, another positive side on the weekly chart. Now, for the day, Enbridge closed up 23 points at 42.96, so just under 43, and again, was only up by 0.23. It's not much higher than the open, but you do see Friday, Thursday, Wednesday, Tuesday, Monday for the week, a general increase. Definitely a good sign. Now, we do have a MACD crossover here on the Thursday, another positive indicator, and both the RSI and stochastic are both trending higher significantly. Momentum is definitely with the stock. I could see it again ranging between 43 and 44 as we near this Christmas deadline, end of year deadline for the Northern Gateway Pipeline. The Joint Review Panel will be making the decision by the end of the year. So can we get to 44? I can definitely see us get to 44 if oil prices stay steady and if Canadian and U.S. economic data doesn't pull the entire market down. So Enbridge is definitely on a tear. So continue to use your fundamental and technical analysis before getting in. IMO, we have the 3-year weekly chart. Tough week for IMO, a lot of movement, but we did, again, close above 45, which is important because it is a support line. So a lot of volatility for the week, but again, that obviously helps when you're trying to trade. MACD and the MACD histogram, while positive, histogram bars are staying the same as last week and slightly lower than the week before. So a bit of a declining trend on the histogram bars. So until oil prices start to rise again, or at least trend sideways, IMO is going to be in for some volatile movement. RSI, slightly higher. I was generous in giving it a green bar, or a circle, but it is turning up. And on the stochastic, we do have an inflection point indicating a potential cross. So next week should be interesting for IMO. I'm positive we can break this 45 and stay above 45 next week as long as things stay the same. Looking at the 6-month daily chart, IMO closed up today on Friday, up 47 points or 0.47 cents at $45.12. So we did close above 45. As you can see, Monday, Tuesday, Wednesday was definitely a declining period. So if you're able to get it below 44, great. It definitely, Thursday and Friday jumped due to the news in the market overall. MACD and the MACD histogram, while the MACD line is above the positive, above the zero line, it's a good sign. We do see the histogram bars shrinking, and we're coming up to a potential MACD cross. Again, great sign for positive indicators. However, we want to focus more on the RSI and stochastic, which both show momentum is definitely with IMO. It looks like they would try and reach 46. We haven't broken through 46 in the last 6 months, so there's about a little under $1 in terms of movement until the stock comes back down. Now, if we do break through 46, it will be a 6-month high, and it will be something to watch for as we move forward throughout the week. Suncor, 3-year weekly chart, a bit of a different picture for the energy stocks. 1, 2, 3, 4 weeks of trying to break through 37.50, just couldn't do it. Even though this week we closed higher than we opened, it is still a lower bar altogether compared to the last 4 weeks. So we may have been hitting resistance. We may be coming back down towards 35. And the reason why I say that is even though the MACD and the MACD histogram are positive, we have 1, 2, 3, 4, 5 weeks of declining histogram bars, showing that the divergence and convergence is shrinking. In terms of momentum, we have a flat on the RSI, and in the stochastic is showing a negative declining line, showing that there is movement away from the stock. Today, Suncor closed down by 8 cents at $36.80. But if you look at the bar, I mean, not a ton of movement. It's only 8 cents, so it did close higher overall for the week. Monday, Tuesday, Wednesday all declined. Thursday, Friday, we see the increase. MACD and the MACD histogram on the 6-month daily chart starting to show a bit of a turnaround, and that's definitely due to the Thursday's rise. But again, we could be in a period of phase 1 or plateauing before the stock decides to move up and down again. Could we reach just under 38? Most definitely. You've seen it come back, up, down, up, down, up, down, up, and then down again. So we may be able to reach 38 for the week, but that's assuming things stay the same. Looking at the RSI, giving it a flat blue circle, indicating a sideways movement because we haven't really broken through the high for the week. And even though Stochastic is indicating that it is positive, we do have Friday's turn to the downside. So it could be heading for a lower decline over the next couple of days. Now, that could easily, again, just turn up quickly depending on the price of oil. But for now, I think Suncor is probably going to come back down to 36 and maybe come just under due to some of the selling. That's it for Suncor. Now, Royal Bank definitely pushing the financial index higher. As you can see, 52-week high established this week. We closed higher than we opened, much higher than we opened. Great sign for the stock. That's just around $68. MACD and MACD histogram are loving it. You can see the histogram bar is growing. Stochastic and RSI both showing that momentum is there. Compared to the last 4 weeks, we have some actual movement from Royal Bank. Looking at the 6-month daily chart, Royal Bank closed up 34 cents at $68.03, so just above 68 to set this new high. MACD crossover, good sign. RSI and Stochastic both showing strong signs of appreciation. As you can see, histogram bar is significantly higher, so you could see Royal Bank continuing to move up. One of the reasons this could be is due to the high price of TD. So with the room to maneuver, investors may be jumping in on the Royal Bank stock here. So again, I would be a little cautious trying to get in on Royal Bank. It might just be hit the 52-week high and then come back down towards 67 or even 66. So again, if you're going to be trading Royal Bank, be cautious. TD Bank, we did have the 52-week high last week, and this week we did close higher than we opened, but again, lower than the previous week high. Stochastic and RSI, I gave it both a blue. We do have an inflection point here in the Stochastic, potentially a crossover. MACD and the MACD histogram are quite high. You do see 1, 2, 3 weeks of declining histogram bars, showing that the convergence divergence is shrinking, but I would expect that to occur as we do kind of a sideways movement here. But again, very, very sharp appreciation over the last 2 months for TD. I would expect it to kind of plateau for a bit before coming back down to trade some volatility in between. But again, it's very expensive right now, and you should be determining the ranges for the week. Looking at the 6-month daily chart, TD closed up 21 cents at 92.51. I would say the range is about $91 to $93. You can even say 90 to 93. If you want to include a couple of weeks before. What's interesting to note is that we do see the MACD starting to turn higher on the daily side of things, indicating that there is potentially a cross coming next week or the week after. We do see the histogram bars shrinking, a good sign. RSI kind of flat, kind of turning higher. I went with the blue circle to be cautious. Stochastic, strong appreciation is indicating from Thursday and Friday the appreciation. So a bit of growth for sure. Can it go higher? Obviously, we can see it potentially even reaching up to 94 over the next couple of days, but this crossover will be a significant buy signal. Looking at the price of gold, not so pretty. Over the last 6 months, gold has fallen by $207 almost and down 14%. Started off on a high note and came crashing down for the week. And obviously that will transfer over to the ETFs that we're going to cover. I'm not 100% sure why gold fell. I would expect the negotiations to have had a play in this as this flight to safety idea is removed. So with Thursday's announcement of the back to the table negotiations, investors would feel more confident in equities and they wouldn't need to buy gold to hedge against inflation or any decline. Looking at CGL, iShares Gold Bullion Fund, obviously showing the decline in gold prices. Monday, Tuesday were good. Wednesday, Thursday, Friday, abysmal. You see the strong drop over the week. MACD couldn't quite break positive, touched at positive, and then headed, or touched at zero, sorry, and headed down to negative. RSI is negative. Stochastic is negative, and it is heading towards an inflection point here at just under the 20 mark. But again, that could continue to head lower if the price of gold continues to fall. HGU, Global Gold Bull Plus ETF, again, falling price of gold. You see a break to the $8 mark. MACD and the MACD histogram are flat because it's not really going anywhere other than down on the Friday. And the RSI and Stochastic indicate that decline in momentum on Friday as they head lower. I would expect HGU and CGL to remain fairly depressed as gold prices do take a bit of a contraction. With that being said, HGD is going to reap the benefits, and as you can see, it's definitely jumped up especially from Thursday to Friday. HGD closed up $1.26 to 22.20, just under its resistance point here at 22.50. If gold prices continue to decline, it will break through 22.50. MACD and the MACD histogram, both positive and growing. RSI and Stochastic definitely showing the momentum is there as the gold bears are winning right now. As gold continues to fall, this ETF will continue to prosper. Looking at silver, not quite the same sell-off as gold. Maybe the market is a little weaker for silver, but again, still a decline. It's down $4.50 and change, which is a 17.6% decline over the last 6 months. So we've been doing really well up until the beginning of September, and from there, we've just seen this $2 drop continue. SVR, the iShares Silver Bullion Fund, again, showing the decline in the price of silver is reflecting on this ETF. MACD and the MACD histogram are both flat, pretty much at zero. I will expect the decline to continue and for the MACD next week to be red. RSI and Stochastic both showing the steep declines from Thursday to Friday. And you can see momentum is pulling away from the ETF. HZU, the Bull Plus ETF for silver that we follow, again, declining. MACD and the MACD histogram are both flat. And we do see less volatility on the RSI, but more volatility on the Stochastic. Thursday to Friday's gap wasn't as pronounced, but Friday it still closed down 26 cents to $8.43. So again, when the silver prices fall, the Silver Bear Plus ETF will go up. HZD closed up 21 cents to $7.35. 4 days of appreciation. We do see the MACD beginning to turn higher, and the histogram bar went from flat, flat, flat to a bit of an increase, showing the growth. RSI and Stochastic both loved it. They are showing momentum is with the ETF. I would expect us to close this up until $8 would be a good move for the rest of the week. And if silver prices continue to weaken, we will see this ETF grow. So that is it for us this week. continue to read the news and try and stay updated with the negotiations about the debt ceiling in the United States. For those of you in Canada, have a happy Thanksgiving. Remember, the TSX is closed Monday. So enjoy your turkey and meatballs and ham, whatever the case may be. And we wish you a happy Thanksgiving here from Train to Invest. We'll talk to you guys next week. Bye now.
The organizer